The Russian invasion of Ukraine is taking a turn for the worst. It does look like that they are moving in on the Ukrainian cities, and this is going to be a long-lasting situation. The Western world, led by the U.S., is of course putting sanctions onto Russia. These sanctions will have some unintended consequences or some boomerang effects back onto the Western world, and could push, and probably will push, Europe at least into a recession. The first boomerang is going to be natural gas and crude oil. Russia is a big exporter of both of those items into Europe, and the prices are surging on those items now. And although there is talk of trying to not have the sanctions impact those exports by Russia to Europe, it does seem to be having an impact today. And lack of energy means lower economic activity. Higher prices means less spending of dollars available, potential layoffs. The possibility of recession in Europe has gone up dramatically. The other item is wheat and corn and other agricultural products. Those are big producers by Russia, and those items are going to be in very short supply over the winter, meaning higher prices, more expensive food and feed that goes into animals. So food prices are going to be going up very significantly. The third item is metals. Russia is also a big supplier of metals, and those items are going to go up in price, especially aluminum, copper, things of that nature. So we have three areas where prices are going to go up dramatically, causing it to be more expensive for Europeans to buy things. It's clearly going to spill over across the globe. U.S. consumers are going to feel some of this crunch, as many of these are global commodities. And the spillover, even though it'll be worse in Europe, will spill over into the U.S. as well, increasing the inflation, or at least maintaining a high inflation rate for the foreseeable future. It does have a slight benefit here to the U.S. It is going to be a benefit to companies in the oil and natural gas business here in North America, companies in the agricultural equipment, agricultural chemical business. Those are going to be beneficiaries here in North America, and also metals and mining companies, uranium companies that are located primarily in North America. All those companies stand to benefit from the fallout of the sanctions. The other big potential unintended benefit, unintended negative, the boomerang, is the use of the US dollar payment system, SWIFT, messaging, to exclude parts of the Russian economies, their banks, etc., from the system, has the potential to have a major negative boomerang effect on the U.S. and its placement as the reserve currency with the dollar. I do think this weapon is being misused. I think it is the benefits to the U.S. of a dollar reserve currency are so big that we should not be encouraging people to move from the SWIFT system, move from the dollar reserve. Russia and China are going to very quickly figure out ways to do business. Russia and other countries are going to very quickly figure out ways to do business outside of the dollar. This is very negative for the U.S., especially considering we have a $30 trillion in debt here in the U.S., a lot of that owned by the international community as part of their reserves. their currency reserves. We have unfunded liabilities in excess of 30 trillion, both on Social Security and on Medicare. That also puts us in a precarious situation. We like the fact that people were holding dollars and not really spending them, and basically using them as an asset as opposed to a currency that they were transacting with. So encouraging people to move from the dollar reserve system, I think, is a very big negative, and causes the likelihood of a dollar run to go up significantly. Now, clearly, this is something that'll take a while to build through and catch momentum, but it has been building for years and years. The debt level at 30 trillion, the unfunded liabilities, those have taken decades to build up. We are past the point of return for fixing the debt and deficit here in the U.S. We are kidding ourselves with the lies we tell ourselves on the unfunded liabilities and the ramifications as far as the value of the dollar to purchase real goods and services, especially real goods and services from foreigners, is going to be pretty dramatically changed and reduced over time. So very nervous on the longer term value of the dollar. I do think you want to stay away from fixed income securities. You also want to stay away from cash on a longer term basis. If you need cash temporarily, try to stay in it as short term as possible. The commodities should continue to do well over time, although they have surged here recently. And given the surge, I've taken a little money off of my energy and gold stocks here. When I say a little, I took around 10% of the money off the table on those two sectors. So I do think they're still going up longer term, but the big surge from a portfolio management risk control, it had gotten to be too large part of my portfolio. So be cautious. I do think the Russian-Ukraine situation is turning out to be a lot more significant than I originally feared. We could possibly have another down leg in the stock market, and I advise one to be cautious. If you like this video, please like it and share it. Please sign up for our email and text alerts at buildingbenjamins.com and see our full disclaimer on buildingbenjamins.com. Thank you.